We are ready. Oh, what is happening, everybody? I think, are we live? Steven, can you hear me? We are good. Audio check. Check. I think pretty good. Cool. Well, welcome. Type in the chat, guys, if you cannot hear me. But if you're new, we do this every Monday. Typically, I start a little bit late because I was looking at my deck here that I have to prepare, and I'm like, whoa, there is a ton of stuff going on. So I actually had to take a little extra time just prepping all the numbers and everything. But we had an amazing week last week. I think if you are not watching these, even if you're watching the recorded versions, that's awesome. Follow the channel, like the videos. If you want to comment, I'll view on those. I'll view those and I'll reply to you if you guys have any questions. We had an awesome week last week. I think it was very hard to have a red port last week unless you were super bearish. But that said, we kind of called it. We knew it. And what we do in these meetings is really just plan out our week, right? So last week we had really no economic data in front of us, and it was like breath of fresh air. You know, we have a reprieve. We have nothing but earnings coming up in front of us. So we were free for a little run up, but this week is very different. So getting everything ready, I'm like, holy hell, there's a lot of stuff in front of us. So that said, I'm going to just go ahead and jump into this. Before we get started, I just need to point out options are not for everyone. We will talk about some option trades this week. We might even find a couple for you guys if we're checking out some stuff. I know there are a few trades playing out right now as we speak, as there usually are this beautiful Monday morning. But if you're new to options, please call 1-888-OPTIONS and get a copy of Characteristics and Risks of Standardized Options before you start trading. And I think we are off. I'm supposed to read this before we get started. I need to point out that you should carefully consider whether trading is suitable for you, considering your circumstances, knowledge, and financial resources. So that said, here we go. What we do every Monday, we're going to take a look at some of the previous headlines. Steven, my partner in crime, is also here with us as well. If you have any headlines you want to pop in and share, by all means, feel free. We do not really cover any of this beforehand, so it's pretty live. I do have a couple things. So we actually get jobless claims, and there was a headline out this weekend. Jobless claims typically or recently have not been moving markets. It's been nothing but inflation, oil, and Russia, Ukraine. So, oil's kind of popping back a little bit. I actually haven't taken a look at crude futures just yet, but I know I was looking at Oxy because I do have a position there, and I'm like, holy hell, she is moving. Crypto had a nice little run the last couple days, and that seems to have finished. So we'll see. Be very cautious. There was a huge pullback on Sunday. Wild. And then, so other headlines that I did pull. So, if you take all these things in their collective, right? Americans filing for, and these are just headlines from like Bloomberg, Wall Street Journal, what have you. Americans filing jobless claims at highest level in the last 18 months. Fed factory outlook falls to lowest 1979. Soaring mortgage rate discourage home buying even as rental prices increase, right? European central bank surprises with a larger than expected rate hike. It's first in 11 years. And I'm like, I really like to find some kind of, good news typically, but at the same time, I don't want to be biased either. So this is what it is. What is cool is that if you guys trade with us, we trade the crap out of earnings season, and earnings season is finally here. This is the first week we really ramp up. I know we started to get some before, some last week, but this week, you guys, we almost have 1,000 companies reporting earnings. Can you believe that? 1,000 companies in a single week. That is huge. Talk about playoffs, baby. I mean, this is when we really, this is the part that we love, really. So, that said, I want to make sure everything is on. Can you guys hear Steven? Say something, Steven.
Check.
That looks good. All right, so earnings season is upon us. There are a bunch of other headlines. Did you see anything that popped out to you, Steven? Could be, stock related, could be market related, what have you.
Nothing. I mean, I'm just watching the economic calendar. Obviously we've got FOMC this week and all of the other stuff.
It's a huge week.
Yeah, big week.
So buckle up, boys and girls. It's going to be a ride. That's for sure. So we start off, and I recap this typically. Like I said, last week, very, very light week. We really didn't have anything major in front of us. We did have some housing numbers, so building permits, housing starts, building permits. Like I said, these are in the past, right? These are more commercial. Wow, this mouse. I'm going to have to fix this one day. It's clicking. Building permits are commercial, right? So like what commercial buildings are starting, right? And this is actually pretty flat. So previous, when we look at these numbers, what you guys are going to see is that there are consensus numbers, and then we want to look at actual numbers. So previous is somewhat important to kind of give you the benchmark. What's really important moving forward as you look at economic data points and as they get released is what the consensus, or sometimes called forecast, number is. That's actually what the market is pricing in right now. So at the time, let's say building permits, before this number was released, the market was pricing in at that point in time 1.65 million, whatever this is. And what came out, 1.68. The previous was 1.69. So will that be market moving? No, that will not be market moving. This guy right here, this is commercial or residential stuff. Probably not too market moving. Existing home sales, that's a little bit lower. What you can pull out of these things, and if you track them on a regular basis, you can start to see, well, residential home sales are slowing, right? Did we see that in just our very recent headline? Yeah, we did. Soaring mortgage rates. What? So there you go. So mortgage rates are going up, but home buying is slowing. Rental costs are going up. This is your inflation. So how does the back half of the year really start to pan out for us? That's what we're trying to take a look at. Sometimes, the market's going to price in, not sometimes, the market prices in what they believe is going to happen, let's say a year down the road from now. So even though we might be looking at this information right now, remember that the market is forward looking. So as we start to look at things like peak inflation, which it seems to me that the market may have priced in already, that actually, the second that inflation is at its highest and the first glimmer of some hope that it's maybe starting to come down or stop raising at such an exponential rate, that's when the market will start to rally. Because remember, the market is forward looking. Even though inflation is still going up, which we know, is it going up at the same rate? Same thing with interest rates, right? We know that interest rates are going to go up. It's not a big deal. That's not what's going to move the market. What's going to move a market is how fast they go up. So that said, when you're looking at this kind of stuff, especially because we're coming into earnings season, what we're going to be looking for during this next earnings season actually is really bad information, bad numbers, but good price action. That's typically a sign that the bottom is in. If you have something that's really good numbers and the stock sells off, we call it the old beat and skeet, right? They beat numbers and the price dumps, the bottom's not in. So at that point, if they beat numbers, but they sell off, the market's saying, well, what is left in terms of upside, right? And there are some pretty beaten down names actually in the old high flyers, like the tech stocks. So here we go. So we track a little over a year's worth of data every quarter. So we do run an earnings system. It's a hardened system. And in that system, we track all kinds of metrics. And so this is one metric that we do track, and we do review it on a very regular basis. But this is the earnings. So this is the Dow 30, essentially the top 30 companies in the market today by market cap. Q2 last year, so this is a year ago, we had 29 beats, 1 miss. And I think this probably was peak earnings. I don't really want to say it. But since then, you can obviously see a very clear fall on how many companies are beating. Well, 29 out of 30. You really can't get much better than that. But a year ago, that time, that was probably close to the top of the market, I'd say. What do you think, Steven?
Yeah. I'd say so.
Yeah. 1 year, July to December. Last December was our peak. Yeah. Just barely close to that kind of like blow off top. We'll see. We're really not that far down when you look at it on a very long-term basis. What was it? What is this? We were like 20-something% off the high. Who knows? Yes, not even 16% off the highs. Wow. We may look back at all this and be like, well, we were making a big deal about nothing. Who knows? But this week, here we go. Over 900 companies. This is like 920, something like that. But, by the end of the week, we might actually get that 1,000 companies that report. They come in and sometimes they report early. Maybe they'll push some things around. But this is the first week. In the next 3 weeks, from today to 3 weeks today, we will have, all of the S&P 500 companies have reported. This week is probably the biggest week for the tech earnings. So this week we actually have Amazon, Google, I want to say Facebook. I only want to say Facebook, Meta. Who else do we have? Microsoft. We have all the FANG companies reporting. I will say historically, statistically speaking, this is not a week that you want to be super bullish on the market. It's not necessarily a week that's really a dumpster fire either, but it is typically slightly lower. And what is definitely true, and you'll be able to use this to your advantage in a lot of situations, is that implied volatility levels are actually going to be really high on the indices. So think about the Qs selling premium on the NASDAQ on QQQ. And as the sectors start to report, they actually report kind of in groups, right? So you'll have your home builders, you'll have your semis, right? You'll have all those little sectors go boom, 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 one after the other. And as they build up, the second that they are all kind of clustered in that little group, the index volatility itself is actually very elevated. And you can take advantage of that for sure. And it's not like you're going to have the same kind of, single stock risk that you would trading earnings. I will say also that looking at the numbers so far, this does not look like it's going to be the quarter for your lows. So the last 2 quarters, I will say we had huge moves. We call it like Volmageddon of earnings, really, like massive, massive moves. And a lot of the companies have actually, a lot of the option chains rather, have actually priced in that move. So if you're looking at something that's had 2 or 3 massive moves in a row already, I would be very, very weary or cautiously optimistic if you want to. Snap is one that typically moves, and that bad boy held true. Actually, I believe Snap didn't even move that much last quarter, so it was its turn. The next one would actually be like a Roku that loves to move quite a bit. So that said, here's what we have for the week ahead. Massive week, though. So not only do we have massive earnings, right? So we have massive earnings ahead of us, huge. We have massive economic data. So unlike last week, where it was like all systems go, clear skies ahead, it's not quite like that this week. So we have Wednesday is our biggest day of the week. That we actually do get the FOMC rate decision. So that's when we're going to see officially whether the Fed decides to go 75 basis points, 100 basis points. We'll actually take a look. And I'm going to show you guys a site also. Super easy to find. I'll just Google, just in CBOE, Fed Watch, just like that. Enter, and you'll get this countdown to FOMC Fed Watch tool. Right now, let's see, where's our presentation? Right now we are at, I'm going to go to Wednesday, 1.75%. And here on this website that we just pulled up, this is actually going to tell you what the market is currently pricing in. So as of today, the market is, and this will change on an hourly basis or daily basis, so you have to pull it up, from time to time, that the market is pricing in that we're going to be at 225 to 250 basis points at the end of the month or after Wednesday. So what does that mean? That means if we're at 175 today, that means that the market is pricing in a 75% probability that we will get a 75 basis point rate hike this Wednesday. There's a 25% priced in probability that we'll get 100 basis point. This is actually, 100 basis point. I got nothing here that says anything about 125, and I got nothing here that says anything about 50 basis points. So really, if I were to guess, we get 75 basis points and we're probably off to the races. But for that day, right? So remember, FOMC days, big, massive moves. They're very quick. They're very violent. And they're over in about 36 hours. So 36 hours, a day and a half, essentially, is what it goes. And then we typically reverse. So this is a trader's market. Just that is what it is. After Wednesday, we actually get two things. So Thursday, we get GDP. And I think that this one, GDP is going to be a big one. This is going to be the earnings stuff. And after everyone starts reporting, this GDP, metric may move the market quite a bit. I'm looking at this is the first one of this quarter, I believe. Yeah, and they'll revise it over and over. But we had just gotten the Q1 final, but this I believe is going to be the first one of Q2, and so that could be a big number, depending on what the market looks at it like. So we'll take a look at that. Friday, we have another big number, two big numbers actually. Friday we get PCE, right? So the price index, this is inflation. This is the inflation number. So let's say we get 75 basis points on Wednesday. Market pops a little bit. GDP comes in and, is lower. Then you reverse all of that. And then PCE comes in lower, consumer sentiment good, you're off to the races. That could be something like that. But throughout that entire time, there's going to be a lot of chop. So be patient. Pick your spots with precision and trade lightly. Really, trade very lightly, because this is going to be a massive week. So if you guys want, if you're in the servers, maybe we'll throw a little, I don't know. I'm sure some of your crew will do some kind of FOMC watch party. We typically do. Grab your popcorn. But for us, we're going to be trading earnings. So if you're trading earnings, what's very cool about all of this shenanigans is that earnings trades are market independent, completely nothing to do with whatever is going on here. So, take that for what it is. It's also a very cool thing, right? So if you are trading the earnings systems with us, it's by the way, if you still want to sign up, you can. We start on Tuesday. So we actually start Tuesday, 10:30 a.m. Pacific. It's like papergains.com. And under the subscription page, there's a little blurb about it, and you can sign up there. And everything is outside of Discord. It's all direct through a similar platform, but through a webinar platform. So here we go. All right. So today we really didn't get anything. We actually get 88 companies reporting. I mean, this is very, very low kind of importance stuff. The only thing I will say is that there was some Fed funds activity. I believe we had a note auctions. Yes, 3-month, 6-month, and a 2-year note auction. That typically does move some of the markets. So if you're into the 10-year, watching like, what is it, ZN? Yeah, 10-year note futures. That bad boy has jumped quite a bit. We'll probably this will add some liquidity, so it might fall back down a little while. Fed manufacturing index, we got that. That actually came in lower, lower than prior. The forecast on this was actually 12. So I can't put it here. Anyways, but not majorly market moving. We'll take a look at we'll actually take a look at the indices also, and we'll get you guys some metrics and some levels that we're watching for sure before this is over. So let me just run through this really quick. Tuesday, again, not a whole lot. We get more housing data stuff. So we have new home sales numbers coming in. I don't think that's going to be majorly market moving. CV consumer confidence, that's kind of like our precursor to what happens if it's 100. The precursor to market, what was it? Our number on Friday. Michigan consumer sentiment. Yeah. I believe it is. Holy camole. Yeah, consumer sentiment on Friday. So CV is, I believe it's Chicago board. Yeah. But what's kind of interesting there is that actually the Fed did specifically say that they're watching that stuff now, which was weird to me. That was very new. Our earnings trades are called IVES, this implied volatility event system. It's a very systematic trading system. Everything has a cut, dry, beginning, middle, end. And we're going to teach that system. We're going to teach it starting Tuesday, right? This Tuesday, 10th. Oh, all times are Pacific, by the way. And it'll be 6, 1, 2, 3, 4, 5, 6, probably 2-hour sessions, at least with me. Steven might run out of gas at some point during those. But yeah, we'll walk you guys through a very hardened, very reliable, very like money approach to trading earnings with options. Tuesday, we also have 163 companies reporting. So this is why we start our system on Tuesday. Look at this. Watch this number at the bottom. So remember 900. Wednesday, 283 companies reporting. Can you, like, that is wild. I'm getting excited. This is going to be a really good earnings season. Like,
I feel it.
Wild good. This is like, I'm excited, sorry, because it's kind of like my playoffs. This is where you can actually make in a quarter, like in a 2-week period, probably what you would just systematically almost in a whole quarter, trading little bits and pieces. We'll see. Right? No promises. But Wednesday is our biggest day, right? So both in terms of earnings, that's when we really kick off, but also this is the day, right? Wednesday the 28th. Do I have this date right? I feel like I might. No. Wednesday's the 27th. So 27th. Ignore the dates for a little bit. Wednesday's the 27th. My bad. And at 11 a.m. Pacific. So again, Pacific time on the left. Adjust it for whatever time zone you're in. 11 a.m. Pacific, we get the actual interest rate decision. You might see a move just slightly before that because, the news media outlets release it before then. If you're trading this, you guys, just remember there's one rule to trade an FOMC event, and that is that the first move is the fake move. So don't buy the first move. That's for sure. There's typically, like a knee-jerk reaction. That's the first move. And then the market's like has the normal reaction, and that's a little bit bigger move. And then same day, boom, boom, same day, you'll get a third reaction, and that one typically carries throughout the remainder of the day because they're like had maybe 30 minutes to digest everything. And it is that fast. Like you're going to reverse the entire day and then reverse it again and then some, and then reverse it again, and then some more. And then overnight, the very next day, so careful swinging anything, the very next day, the market kind of like sleeps on it, and they're like, well, wait a second. There's other stuff that I need to think about. And maybe somebody says something overnight, or there's some kind of comment, right? So just be very cautious. Yeah, this is not the time to be heavy in your day trading, and definitely not swing trading for sure. That's what I will say. So 11:30 a.m. we actually get JP speaking. So probably search the YouTubes. There's going to be a live stream there somewhere. I'm sure of it. Thursday is the digestion day, and we get this GDP number and initial jobless claims. So jobless claims have not been a market moving event at all for quite a while. But this last week, right, we got it started actually moving. If I pull up the calendar, let's see, jobless claims. This is Thursday. So jobless claims, sometimes people chart this stuff. Look at this. It's been around 200,000, which was essentially pre-pandemic levels. So 200,000 new jobless claims. And this is what we just hit last week. So this is like, wow, all right, here's the curve that we're looking at. So pandemic kind of levels. This is wild, right? But we're starting to flip up, right? And you have this kind of like changing character. And that's what the market's starting to worry about. So if you think about rising inflation, and then you think about whatever loans are out there and potentially some bad loans that are currently on the book and not really found out, maybe some stuff that's funded by your stimmy checks or funded by whatever, right? Or people that had jobs, and we're not talking about the drive-through jobs, we're talking about actual careers that are maybe at risk. If you think of Facebook, Amazon, Google, what have you, actually starting to cut their labor force, those are the people that you'll start to see this. Unemployment is not going to help them. Trust me, it doesn't help them. But that could have a pretty heavy impact on the economy, and I think that's really what everybody's looking at. So just be aware that is on the radar. If GDP is revised significantly lower, so consensus is that we actually turn positive, and this is why I think it's kind of odd, right? So if we have a positive consensus on GDP, and I just clicked that, it's a hyperlink. Oh crap! Positive consensus on GDP. This was the last one. I mean, if it comes in actually negative, because the market's pricing in that we're going to have positive GDP. I really don't know why they're pricing that in. I couldn't tell you. I mean, after, just look at the chart. Yeah, okay, this is pandemic, but we'll see, right? That's why I think this could be such a big thing. If last quarter was negative 1.6%, right? And the first version of this GDP that comes out is, let's say it's 1% to the upside. Oh, we're rallying, right? We're going higher, period. Sorry, regardless of what else is going on. If jobless claims come in, way higher, that could be a thing also. You just got to see. It's going to be a wild ride. That's my point. Just day traders, like, this is your market for sure. Be very cautious holding anything overnight. It's been near impossible to get anything more than a 2-day, at most 3-day rally in stocks, and anything after than that, because we're talking Wednesday, Thursday, Friday, Monday, Tuesday, Wednesday. That's it, right? Like, first half, back half of the week, and then you're done. So Friday, is not a light day. I mean, Friday, this is a massive day one more time. So Friday, we actually get personal, like PCE data, right? So that's the actual inflation. Wow, I'm brain farting. But Friday, we actually get inflation. And so that's going to be, and I'm sorry, I've got my eyes off the screen. I'm pulling it up. Friday, personal spending, personal spending month over month. So this is like consumer spending. So if we're spending money, previous point 2 consensus is that they're going to come in higher. This is spending. Yeah, this is definitely something that the Fed is absolutely watching. It's not actually inflation, but preferred gauge. So yeah, preferred gauge by the Fed. Here, and I'll pull up this chart again. Here we go. Cool. So this is where we are. So PCE, annual charge, this is 1 year. So we're at 5.3, and we're seeing it start to slowly come down. If we hit, 5 or something like that, it's like pump the brakes, guys. We have, and all of whatever might have happened Thursday would be reversed again. On the other hand, if we're below 4 or 5, all systems go. So this is why we're kind of at this critical tipping point across the board. Oops. And just, we just really want to tread lightly. Consumer sentiment, the other week we had the lowest consumer sentiment number in quite a while, and that did move a market. And the Fed did mention specifically, hey, look, we are looking at things like consumer sentiment. That is done. And again, if you guys are looking, did I put core on this PCE? No, I didn't. I'll just pull this down here. There are different types of PCE. So there is core price index, and then there's what's called the headline number. So the headline number includes things like food, energy, gas, that kind of stuff, utilities. But historically, the core number, this is inflation. The core number has been what the Fed uses as their primary gauge. That said, we've always had an issue like, why would you not count the biggest things that are in my budget as a consumer? And I think that especially with the gas and food, like other things going up so much higher, like I am actually starting to see a little bit of a change in that. So the headline number, I believe, is becoming more and more prevalent, which is good. That's the one that actually makes more sense. So again, we're going to be looking personal spending and PCE, right? So spending going up, PCE is your inflation number. PCE, this is our interest rate, 6.7. So look, let's take a look at this PCE month over month. Oh, is this the right trading economics? Yeah. Unchanged annually at 6.2, 6.3. 6.6 was the record price. Why is this 120? I don't know this number. Holy camoli. Anyways, this is stuff. So what's forecasted right now, that's what you want to watch. Market is currently, wow. Yeah, market's pricing in that we go higher, but not that much higher. Am I reading this right? Looks like it. Let me just give you core because I do watch that a little bit more. This is what I'm looking at. So we're at 5.3, 5.2, 4.9. Yeah, if we get to 4.5, I think we run. I think that's all clear. Core PCE year over year. That's the one that's going to matter. Core PCE month over month. Yeah, this is a different number. I mean, clearly we're going up, but are we going higher at the same rate? That's what we're looking at. That said, I think that is it for the week. Cool. Yes. So again, if you guys want to check out the volatility system, so it's earnings and it's you do have to have spread approval, by the way. So you can use Robinhood accounts. You cannot use Webull accounts. They do not have calendars. Last I checked. And even if they do, I'm not familiar with it, so I wouldn't be able to do it. We typically use Thinkorswim. But 12 months average, our average win rate is actually, that's probably close to 85, 83, 84% win rate with an average return of 42%. These are statistical numbers. Hundreds of trades. And we'll do 2 sessions, 2 days, so almost 4 hours of teaching you guys the system. And then we're going to do essentially 8 hours live trading together, taking trades, doing the system together to make sure you guys have it all under control and know the system. Cool. So here we go. I'm going to take a look at the charts. We read a little bit over. I think we're okay. I'm going to have a 30-minute candlestick chart up here. This is typically what I use for like my broad analysis. These orange boxes, if you can see them on my charts, this is an average week's range. So this is how we typically roll. Right now, last week we opened, where did we open? Here, right? And you guys, this is how accurate this stuff is. I mean, deadly accurate. How do you predict overall market sentiment for the next day? Here, so I'm going to measure for the week. Day to day, so Poison Expert is asking, how do you predict overall market sentiment for the next day? I'm actually a swing trader, personally. And so there are, not in this market. What I would say is that if you're putting in the lows of the day in the morning and you're closing near the highs, as a swing trader, you should know that's actually super bullish. And if we look at last week as a perfect example, so last week we opened here. The reason we had this is we had, what did we see, Stephen? Did we even get, this is my 345 level. Where were we? Is this Monday? I think this is Monday.
Wait, for what?
I was looking at SPY.
Oh.
Monday. Monday was the 18th, right? So we opened here on Monday, right here. I had 345, 385. I'm sorry. That's what you're.
Yeah, I was like, wait, that's why I was like, what?
I had 385 as my level. Steven actually had 382. And that was the base of this kind of consolidation zone, and also where we got that first 75 basis point hike. So 2 things as we go through on this. I mark on my chart, obviously, fundamental events that will create technical levels. You can do this on your charts if you like. If it's an equity chart, as in a stock, earnings are one of those that you want to do. So we had this double top here. Let's just say last week we were starting off here. We don't know anything about anything. And this is actually, if you look at last week's video, because it's up there, we were sitting here just like this. And I was saying, okay, 385. I was looking at were the level that was getting defended, right? It was getting sold off here, and I was looking for a bounce at 385. Steven comes in and he says, you know what, dude? I like this 382 something level. Where was it? Yeah, 382, like slightly lower right in here. And I'm like, oh, you know what? That lines up almost perfectly with the 75 basis point hike. And so that's actually what we ended up going with for the potential low end of the week, but on an average week's range from Monday's open, right? Because at that point, we were looking at a week that had little to no economic data in front of us, nothing but good vibes for earnings ahead. And I'm looking at this last CPI meeting, which was a fundamental event creating technical level, as a perfect target for an average week's range from Monday's open. And so essentially the trade was, and you do it however you want, that we might come down to here, but that we would bounce somewhere up here right around 401. And what happened, right? We got in. I mean, Steven he nailed this. This was Monday's close. And then we crossed this 340, 385. We said, if we're above 385, we're bullish on the week, right? Did we get there? Boom, right? We got there. Target very close to acquire this. It was like 412 cents.
Just over 400.
I mean, like, just barely. But this is how accurate these weekly ranges are. Now, to your question, Poison Expert, how do you know, right? How do you know from a day-to-day perspective? So, Monday, we're coming in. Monday's a little bit of a weird day. I don't typically trade Mondays. I plan out the week on Mondays. So, 380 was Steven's level, 382, actually. I'm kind of sitting here this day, because it's Monday, because you have all this support, I'm not going to take this day short. And I know that, hey, look, we don't have a lot of stuff ahead of us. But from there, as long as you're putting in the low of the day near the open and closing near the high, regardless of what day of the week it was. So this is Tuesday. Tuesday, obviously a big day. We call Tuesday Turnaround Tuesday. Could it happen again? Sure could. And then Wednesday, you open. The lows are locked in at the beginning of the day, and you close towards the day's highs. This right here, lows towards the open, highs towards the end of the day. This from a swing trading perspective, and you can see where is the biggest volume. Oh, we'll do another thing there. That's actually super bullish. That's like continuation. Did we get it? Yes. Again, lows of the day in the morning, high of the day towards the close. Very bullish. Again, opened up, but Friday, and this was Friday, so here to here, this is a swing trader. Yes, going up. But Friday, we tagged that 400 level, kind of like psychological resistance, what have you, and we put the lows of the day in at the end of the day. So coming in Monday, we were thinking, okay, well, maybe we open a little bit green, and I'm guessing that Steven's going to have a somewhat bearish outlook, but he'll tell you, and my guess is that 392 level, is that what you're looking at, Steven?
393.
393. I'm sorry. I have 392.94. Steven's 393. And we're both going to have this exact same level because why? Because this happens to be this double top right here. Boom, boom. Happens to be the same level that Friday, Thursday, Wednesday we pushed off of. Bulls stepped in where? Wednesday. Right here, right? So did it come in? Right around here. Sure did. And this is what you're looking for. And you can see this. I like to see it pretty clearly on a 30-minute chart. Very easy for me to see. Right in here. 390, 393. We'll call it 393. It's a good, nice, clean, even number. 393. Cool. So as long as we're above 393 for the week, you kind of just got to go with it and say, if that's the low, and we take an average week's range, 406 will be my upside target on the week. Do I like 406? If you took from the very tip of the open, that actually puts me at 410. And I know, because we all know, that is a very critical technical level. Above 410, everybody says recession. What? Because this consolidation right here, this little box, here, sorry, this guy, that is actually the point of control for that exact level. Also, I already had this box right here. So from this first FOMC meeting all the way down to the 75 basis point hike. The point of control for that period from May to, let's say, June is 411. Yeah. So as long as we're above 393, we should be able to chop towards that level. And so one other thing I will say is that this section here, right here, see how that's like very quick bars? This is a low volume zone. Very similar to like when we were looking to the downside on this section, first buy, when we first hit this flush, right? This whole little area, like it becomes kind of this chop zone. So I actually think we could chop into this zone for quite a while. And that could become the next chop zone. Because we did, by the way, this Tuesday move was massive. So could we chop into this zone? I think that's more likely, right? This kind of situation, unfortunately. But this week, because it's earnings week, is typically one of those kind of weeks. So remember, if you're thinking about how do you so number one, we don't predict anything, right? But when you put the lows of the day in at the morning and you close near the highs, the odds are that you're likely like 60%, like likely gonna gap up or move higher in the morning. Doesn't mean the whole day, but just means the very next morning, and that's it. So if we do go to the downside, that said, so here we go, 410. I'm gonna call it 410. Really, what I don't want to do is I don't really want to get caught in this thing. Like I actually did get caught on Friday because I was like 401, and then 400.12 comes, and I'm still holding it, and then it goes down. I'm like, I could have just taken it at 400, right? Like into strength, and I missed that exit. So I will do this. I will take this right probably at 406, 407 and a half is kind of what I like from this morning's low. Just to steer clear of this zone. Because if we do get into that chop zone, I mean, we're definitely chopping it out. So what did you have on the upside target for this week, Steven?
For SPY?
Yeah.
I really want to see it above 400, obviously. And then hang on, let me back up a little bit. I mean, for this week, yeah, I think 406 is kind of actually I have 407.
Yeah, 407 is literally what I was just trying to adjust to from a 410. So 407 to the upside, I'm going to be, what that means is we can ride it as long as it looks clear to the upside up to 407, right? Could it press to 410? Yes, it could, but we want to be very weary of this chop zone, right? And your point of control for that chop zone is 411. If you do get higher, great. Hopefully you're just in some runners, but until that breaks 420, give or take, this is when that trade ends. So again, we're just traders. We're just taking little pieces of an existing move. We're not trying to catch this whole shenanigans, right? We're literally just trying to catch from a week to week basis, just our little piece, and then let the market do what else it's going to do. So that said, if we do break below this 393 level, we cannot be bullish. We cannot be bullish. Hello. And so again, if I take from this Monday's open, and this is why we do both sides, because I don't want to have a fundamental bias. I don't have a personal bias of any sort. That actually takes us straight down to 384-ish. Steven, do you have another number?
Yeah, right around there. 380, obviously being that big psychological level.
Yeah, 380 is right here, 380.82. This was the prior, like where we bounced off last week. So that's obviously like your stretch target. To me, I'm looking at this 380, 393, so call it 384. Right about where that 75 basis point hike actually came in the first time. And that would actually put us right back to neutral. This is very good from there. We just go straight neutral trades, iron condors, actually, because we're straight back into that chop zone, and you don't really want to be, you just very much range bound trading from there. So that's from this morning's open at 397, and an average week's range would take us down to 384 to the downside. To the upside, just over 407 and change would be our upside targets. Again, we're not looking for the downside targets unless we close below or open below with strength below 393. So above 393, we stay somewhat bullish. We have a pretty strong level here, here, defended here, here, here. This is our blast off level. And we are sitting above this 394, almost 395 kind of pivot here from that prior CPI faux pas. Cool. So day to day, use your daily candles. So if it's above yesterday's high at the open, if it's above yesterday's high, and wait your 30 minutes, and then it starts to go up further, then go ahead, continue to trade for those targets. If it closes near the low of the day, don't swing. Simple as that. Spreads are your friends. I would say that for sure. And you could take these targets day to day. Maybe just close about the same day. I wouldn't worry about really swinging anything. All right, Qs on the other hand, totally different story. So we already hit that same level consolidation right here last week. So we did hit that 307 level, and that kind of double top situation that we saw at SPY. This is right around 297 on Qs. SPY is your trader, that's for sure. I don't know that we are going to trade a whole lot of the Qs. At least I don't personally. Here's what I'll say on this. We have these two kind of flusher days, 1, 2, right? Similar to what I was talking about on SPY. I think Qs are a week ahead of SPY. I think Qs go range bound from here. If we take Monday open, to the upside, that would give us 315 on an average week's range. To the downside, it would actually put us right back to that 75 basis point level again to 288. It's a big range. I know we're well aware this gap is filled. But yeah, you would be defending this 288, looking for that defense level to come in and buyers to step in again like they did here, here, here. 295. Yeah. Below this 295, I think you can start to flush, actually. So be very careful.
Yeah, I've got 296 for the
yeah,
Q.
I'm sorry. I'm rounding 295.50 and change, right? That's this top here and this blow off top there. You might get faked out. I would be very cautious here, right? Because this is, remember that consolidation area we were looking at SPY. Here's the same level in the Qs. And these big giant wicks, whenever you see something like that, you typically chop in those for a little while before it actually decides to pick a direction. So you don't need to be in a rush if you're looking for investing or anything like that. This is why I don't think that there's going to be a big giant earnings season. I don't think a lot of people are still super long anything that's high risk, and I don't think anybody's really chomping at the bit to jump in super long. Even if there is some good news. So that's kind of my point, right? I think that this earnings season, after 6 months of some ultra volatile seasons, I think we're in for a good one. I'm going to skip around a little bit, and I'm going to take a look at the Decay. So if you guys are new, we've been watching the dollar index. That's the Decay here. This is a big, big deal, right? And so this one right here, we had a pretty heavy peak. This is like 20-year high, something like that. Some wild high. And finally extended, right? And this guy here, this is visually, in my mind, you can visually see investors flying to cash. So when there's a flight to cash, then the Decay actually goes up, or dollar index, right? This is the dollar weighted against global other currencies. This is influenced by rates and things like that. But generally speaking, right now, the Decay is a way better directional signal than the VIX. Very much so. VIX is going to do what it's going to do right now. VIX is in a contracting mode, so it being short credit spreads actually your friend on the indices right now. So big component of that. That said, I think if we can stay below, this was this second press right here on the Dixie 107. I'm sorry, my forex friends, don't kill me for getting for swagging numbers here. I know. For 106.80. If we can stay below this level on the Dixie, I think that is good for equities. If that makes sense. But mark this, set an alert. I have it here on my charts that I'm watching daily. If we get above that 107 level on the dollar index, watch out. My guess is that we would already be breaking that 393 level in that case. So see how these kind of correlate right here. The VIX, on the other hand, not really going to be a directional storyteller right now. We are range bound on the indices as a whole. So and definitely in SPY, this whole, what is this? A year? Almost a year. How long is this? No, I'm high. 2 months, a month and a half. As long as we're in this level, this range, and we're not breaking out of this range anytime soon, this is a 3-month range that we're sitting smack dab in the middle of. And the VIX is the volatility index, and so it's based on standard deviations. We are smack dab in the middle of a 3-month consolidation zone. We're not going higher on the VIX right now. Even if we come down to 375, right, the VIX isn't going to be at a 45. You're not going to see a 45 handle on the VIX, right? That's just not, you just look at the charts. It's not how it's going to go down. Maybe looking 35 at most. But again, it's still in that kind of contracting situation. So day trader's paradise, no question. And this is 10-year futures. So this is like my TLT 10-year bond, what have you, T-note. So this guy, let's just not, I usually look at TLT, right? TLT, because we don't have a lot of futures traders trading interest rate products. Yeah, I think we hit this. This looks like we could kind of pull back here. If you were long bonds, I think this is the week. We have a lot of liquidity coming into the bond market, so we'll probably pull back to 112 here, which would mean interest rates actually go back up a little bit. Crude oil, let me take a look. We tagged this 200-day moving average. Not a huge bounce, but 1, 2, 3 tags on this 200-day. We are, this is a toughie, actually, sitting on this level. This might be a neutral trade, too. Take a look at that. Again, right back to the same level, 95, that we bounced off so many times already. So violent bounces for sure. My guess is that it wouldn't actually hold too much strength. I haven't looked, but we'll take a look in just a second. So a condor, kind of neutral strategy trade, 115 to call it 85.90 on the downside. If you can put something together that gives you value in that range, I would do that for sure. Again, 3 days, give or take at a time. A little bit here and there. Do you want to look at diamonds? Or, diamonds and IWM actually don't look bad at all. They're both, if you really look at your charts, this is a daily. You're sitting across the board above your prior consolidation levels. If we bounce up off this, it's going to look bullish for sure. But nothing can really hold until we get past Wednesday. Wednesday is the day. So be cautiously optimistic. Stefan, you want to take a look at, do you have a chart on Amazon? I know you threw something out there this morning that looked juicy.
Yeah, it's actually sitting at kind of at my level right now. I'm watching to be specific, 121.35.
I'm trying to see where you sent it.
In the premium.
It's in premium.
From this morning, it's got where is it?
This morning, yeah.
It's way up there.
I know. Sorry, we're busy.
That was super pre-market is when I sent it.
I don't know who Chandler is, but good morning, man.
Yeah, right.
I can't. Crap.
Here, I got you.
That's right. I can pull this. So this is my typical look, generally speaking. So, actually, this is a little bit different one, huh? So weekly, daily, hourly, at least. Sometimes I'll have 4 down here, and it'll be monthly, daily, monthly, weekly, daily, hourly. That works as well. Unless Steven's going to DM me one. Either way. Yeah, so we have both seen likely this 121 level. And where's your, obviously 123. Last week, I had an upside target, 125. I'll use that for now. And
yeah, that looks like I had that mapped as like a head and shoulders on like a 30-minute.
Yeah. So this is like we have a little watch list like this.
121.35. So
this was last week. Yeah, above 118. We go to like 125, which would have been right in that same congestion level. And then we hit that. And now we're coming back down. So 118 would probably be your lower end target. I'm assuming, yeah?
117 is what I'm looking at. But 118 is a profit target, but I'd be targeting the 117.
So just be very careful, you guys. Like if you're trading this, earnings are when? These are day trades.
Earnings the 28th, according to TradingView.
TradingView is the worst.
Wait, what?
Yeah, July 28th. That's this Thursday.
Yeah, so Thursday.
Yeah, so earnings Thursday right here. So right now we did lock in a lower high, right? So high. This is your break of this uptrend structure. Previous structure was breaking 118, going targeting 125. Target acquired right here. Here's your point of control. From that consolidation level, you are below it as of today. Typically, I don't go this far back for day trades, but it's just context for you guys. You know, it's not the biggest context in general, by the way. But even that said, this high is higher than this high. So this is just another lower high, even though it's 25% off the bottom of 100, it is a lower high. And inside of that lower high, you have another lower high Friday and about to break these lows as we speak. So you'd be looking, first target for sure, 117, almost about 118 right here on these levels, 119 for a quickie. But if you break that 118, yeah, Steven's going, what are you going to? What are you going to, man?
I'm not looking any further than that.
Yeah.
Because earnings on Thursday, so this whole chart could just be completely moot.
Yeah. So as a spread trader, I would actually be looking at this 115 to 110 debit spread for this week. I know it's super far out of the money. It's about $1, right? And you're talking about a 2-day hold today, Tuesday, Wednesday, maybe 3-day hold. And essentially what that looks like from a short position, and it's $1, risking $1 to make $4. So 1 to 4, so you'd be about 400% max reward, which you're not going to get. You're not going to get that to be $400, right? You want to take that profit somewhere around 300, give or take. So really risking 1 to make 3 or 2. Yeah, right at this, if you break this low from this morning, it's done. It does not look strong, man. Regardless of what the indices are doing, this bad boy does not look strong. And you could take this really tight, super tight. either right here with a stop at 121, or if you really, like if you were to get another shot, probably going to hate me for this. If it bounces, why is this not coming up for me? If it bounces, you could take a shot, something like that, just around this lower high. But your hard stop for sure, no matter what, has to be 123.70. In terms of just looking at the hourly chart right here, this is your last high, which is lower than the last low. That looks good. That looks good live now. So that, again, that would be 115 to 110. If you're day trading a 115 put at 180, I was actually playing with these at 170 this morning. Looks like it might be catching some steam. Ooh. Yeah, 190. Even if it's just a day trader contract and you grab those 115s, you don't have to be in the money. But that is where the volume is. So that's why I would be prioritizing something like that. A quickie, smaller moves, you want to be a little bit closer to the money, like 120s. They're more expensive, obviously, but there's volume there. Volume on the 120s, 115s, and on the 110s for sure. Some volume on the 125s. Not much. Yeah, 193,000 puts to 150,000 calls today. They bearish. No question. Cool. Yeah, so unlike this one, actually, I was going to look at another one. So see how Amazon is up at this top end of the range, and we were talking about SPY, and SPY is not even close to the top end of that. That's like the equivalent here. Or is it actually? I'll have to double check. But Google was one I've still been looking at. This is a trade that's I don't know which way it's going to go. I have a current calendar on that's pretty directional. I'm not going to swing that through earnings, but I do have, let me make sure I haven't checked in a little bit, but I do have some defense on it. Yeah, it's like down 10%. That's fine. Here's this level. So I posted this morning, but this guy is getting really interesting. So unlike Amazon, that's way up here on its consolidation, Google never found its footing. And I think that's really because of the advertising part of the business, I would assume. But look at this. Once, so at 106, right? Once, twice, big time. 3, somewhere in here, 4 times, 5 times. This guy has been defended heavily right in here multiple times over. I mean, if it can break down that and this kind of wedge plays out, we got some serious targets to the downside. But at the same time, it could go serious targets to the upside. So, by the way, I would wait for this to break. I would wait for it to come back down, up, retest, and then fail. And I'd be looking for that kind of entry here. This will probably all happen post-earnings, but this is a pretty money setup for sure. And that would be one where I would probably be able to get, I feel comfortable, I would be able to get like a 3 or 4 day swing after how long of a consolidation this thing is. Yeah, after 100-day long consolidation, she is primed and ready to make a move. That's what I look at. That's what I can see for sure. This is a massive consolidation. Doesn't matter to me which way, but there's going to be a direction for sure. This will be like a post-earnings, probably follow-through trade. On the flip side, if this can get here, out, you could trade inside the range for now. But you have 2 gaps to the upside. This would be massive as well. So in either scenario, this is going to be a trade that's developing very quickly. So keep an eye on Google for sure into pre-earnings run-up and or post-earnings follow-through. Definitely look at that huge consolidation run on these massive levels. That's a big one. $100. If it loses $100, you know what to say, right? You straight down below, and there are definitely targets below $100. Here's a daily chart. 90, 95. This is your biggest consolidation defended area. I mean, it goes all the way to 75. 75? Really? I mean, I would love Google at 75, but you never know. That was my that was like my 1800. I think I was looking for way earlier. Definitely one to be had. I also have been watching this guy, PayPal. So I'll just take a look. So PayPal is one. So PayPal, by the way, is an earnings mover. So it moves quite a bit. If you've been watching it the last few days, this guy can squeeze real fast, very violently. Again, kind of breaking out of this like lower end of the range that it's been trading in for a little while, right here. So we were short. Now we have this kind of gappy situation. So this came back down, tested, bounced off this morning, potentially looking for a trade up to, at most, in the 90-ish range for a possible pre-earnings run-up. That's on my radar right now. But I've actually got some stragglers here. There was a ton, for the spread traders, there was a ton of 85, 90 debit spreads going out this morning, Monday. Super wild. There was like, for the chain, 2,400 plus volume. It's a bit aggressive to me. Oh, it's 81, 90. Interesting. Yeah. 81, 90. Wow. Those calls are holding. Sorry. For like small account, like I'll trade in and out of like the 90s. Just Monday morning IV is very wild, very heavy. September has a ton of 90 and 110 calls actually as well. But this guy, I mean, you're pretty beaten up. If it does break through that 90, yeah, you go right back into this kind of consolidation zone. So this could be definitely one to watch for a post-earnings kind of follow-through. Or maybe an earnings long strangle or straddle. We shall see. I would not be doing neutral strategies on this bad boy. That's what I will say. For sure. Anybody else got something they want to take a look at? Option trading. What if it is 100? Not sure what that is. Bro, just giving straight gains. Yeah. How do you know? Okay. Roku. Look at that barcode. That's gross. All right. So Roku, again, really didn't move much last quarter or two. So this is one, Snap, holding true to its name, being the big old earnings mover. Before that, Snap didn't move that much here or here, but it had some serious like 80% gappers. So I'm thinking the old guys come back, and Roku was absolutely one of them. Here, I'll do this so you guys know. I'll use this OG site here if anybody works here. Market Chameleon, you guys rock. Let us know if we can get a discount code. But look at this. So last quarter, nothing burger, 1.4%. But the quarter before that, 23%. These are big dollar moves. And 11% here, big dollar moves. If you 7, almost 8%, big dollar overnight gappers. Look at that. We'll see what the implied straddle comes in at this week or this coming season. Earnings report for sure. What are they projected? July 28th. Yeah. That's this Thursday too. Roku. Analyze earnings. Yeah. On the 28th. Thursday. Long straddles, by the way. Very, very not cheap strategies. So like single digit lots, please. Just saying. Other than that, I think we're good. I only had a couple others. Boeing was one that this trade kind of went through. We came back, tested about 150 this morning, and I saw a pretty strong bounce. If you guys, Boeing there was an air show. They got a bunch of orders last week. What was it? Voice concerns. But rising demand, including 600,000 pilots. I can't find it right now. anyways, there's air show. Airbus really didn't get anything, and Boeing got way more orders than Airbus did. So that kind of gave them a little pop last week. Let's see if they can follow through or if they fail. Not really sure one way or the other yet, but it's a nice little bounce. I think everybody's looking the same, right? Like have broken through these kind of consolidation zones that everybody's been in for quite a while and retracing back to now. I think this gives us a good setup, right? There's no need to rush into any trades by the look of it. We have too many catalysts ahead of us. After Wednesday, Thursday, you'll be in the clear, but again, I'm going to be looking for two things: higher lows or higher highs. That's it, right? If it's going to be short, that's fine. I'll take a short trade at a break of yesterday's low down to the prior days before that's low, and really just little chip away, little bit at a time. Till then, SPY 393 is our major level. We can go heavy short at that point, not before. And other than that, you kind of have your individual stock movers. You got some pretty key levels on Google, Amazon looking short, maybe triple bottom here. We'll see. But again, keep an eye on your indices. Nvidia, that's one I didn't do. Nvidia, I still have a butterfly on Nvidia, by the way. Never got back to break even. I think we took this long at this 160 breakout, 160 retest. It is a 3-strike butterfly, so long. Nvidia, long 170 calls. What happened to one of my things? Short 180 calls, long 185s. So long 170, short 2 180s, long 185. Gives us a little positive theta on that guy. Pretty good. And if we can kind of chop towards the upper end of last week, that's going to be beautiful. And I'm going to be looking to close that out for probably close to next max profit. I think we enter that about 175, looking to close her out for about 7. So cool. That looks good. Looking for a higher low. That's what I'm looking for. And then really put the gas on if we can break up tomorrow on something like Nvidia. We have Intel reporting too. So there's that. Intel, always AMD calls when Intel reports, yeah?
Oh, yeah.
That's right. Always AMD calls when Intel reports. Excalibur, yo, what's up, my man? So Intel, INTC, they have big earnings this quarter. This is coming in. This says July 28th. Let me double check on some other things. Because TradingView is crap for believability on earnings. Trust, but verify. July 28th, it says here. So that, again, Thursday. Man, Thursday is going to be a huge day. What I can say is that I take AMD calls whenever Intel reports for 2 reasons. One, because if Intel dumps it, that's good for AMD market share. If Intel does great, that's good for AMD, the industry. So this one may be a little bit different. I'll give it that, just because Intel actually has a lot of government funding on the way, potentially. So actually still bullish on the semis. Looking at 90 calls for a little pop on AMD. Back to that kind of high. Could we pull back down? Yeah, we're right in this kind of consolidation level, right where it got defended. And where it initially broke out once. Defend here, but fail. Defended all in this level. Huge buyers stepped in at 83. Yeah. So just kind of watch this. I'm not a big trend line person, but just to say that we do have it. You have this. So, and again, I don't like to take the first breakout of these kind of triangle breaks because they'll typically look super violent. Be out. If you missed it, you could short because they'll typically come back to the top of that. And that's when you really want to jump on it, right? And then at this point, that would be setting something like a higher low in that instance, right around 86, if that were just theoretically speaking. You want to tag that little candle. Ooh. I actually do like that. So let's say if AMD does happen to pop out of something like this, right? You might pop here. Sure, it'll look super violent. Let it be. And then I would be looking for a retrace to enter right around 86. But not just because it's sitting at 86. It has to make this press first. Actually, we probably have to break that structure. Anyways, you get the idea. It's going to look something, a little something like that. Cool. Yeah, lots of time till Thursday. Anything could happen. This thing could be right back at 80 between now and Thursday. So patience. Excalibur, yo, what do you look at? Type in chat if you're looking at something. Somebody's talking meta. All right, meta, we had also a long trade on that has played. Where was meta? PayPal. DG. I know it was here somewhere. Hello, meta. Okay, so meta was long at 165, right? And that was like instant. The 165 is over. We are right back to 165, which was our original breakout level right here. So let's mark that. 165, boom. That was a pretty big resistance or a pretty big breakout. Happens to be, what is this line? Happens to be the weekly low, the prior week's candle. Why is my strat stuff not showing here? Oh, hello. That's probably why. Cool. So, there were multiple situations here too, I believe 2 weeks ago, or maybe even last week. It might have been last Monday. Did we do this last Monday? Somebody remind me. We probably did. And we said, hey, look, same kind of thing on AMD. If it breaks out and you miss it after this kind of like downtrend, that's fine. Don't take it long here. Short it, if anything, because it'll come back in, and you want to look for it just like we did 2 seconds ago. On AMD, you want to look for what? You want to look for a higher low. So right now, we don't have it. Honestly, we got major catalysts. I'm not touching this bad boy. Oop, I got some stuff stopping out. I'm not touching this bad boy until we're outside of earnings, which is the 27th. Is that right? July 27th. Wednesday. So again, Wednesday. You can do, actually, I mean, you can, right? But be day trading this. Do not be swing trading this. I don't care how much you're up on a contract, because IV is going to be increasing on your options. Yes, that's true. But decay, like theta, with increased volatility comes increased decay. Just know that. Your delta decay, which is something different that you may or may not know about, down goes NQ. Yeah, delta decay, the farther away from your strikes that you are, this is going to shrink like significantly within this. So can you swing some spreads? For sure, you can, right? Is it actually time spreads are going to be your best ones versus like debit spreads, credit spreads. But yeah, I still got this 160 level on this bad boy here. Let me pull this back a little bit. Yeah, so we're up. We're up at the top of this little descending hoo-ha. Yeah, I could easily see this get into this lower 150s because we never really tagged it, and that was actually the level 150. That'd be a nice. I think that's going to be a nice day trader. You break this right now, you're right back into that same kind of consolidation level. So I'm not going to really try to press huge bets. You're very range bound in this level. So below 155 though. What is that level? 154, 35. I mean, could you trade this? Yeah, you could trade this down to the lower end of these range. Each one of these is like a $5 a day on Meta. So it's a great day trader. No question. But same thing, right? Like you're just day to day. Here was yesterday's low. This is why these lines are on these charts. This is automated for our buddy Nagami who makes this Strat Teach indicator. Hit him up, or if you're in our group, he's here with us. 165. Yeah, if you get below this 164-ish level, then you have this. Yeah, 160. That's a solid day trade. Once you break this, that was that first breakout. It's completely given all of it up, and yeah, you could could assume it'll give the rest up. So range bound trade closing here. I love that. That's a good one. Amazon. Yeah. Short Amazon. Yeah, we did Amazon. Apple, actually, so Apple had some pre-announcements this morning that held up the stock as well. They actually pre-announced, where is it? Use the news. Apple announced that they were not going to be as bad as some people thought. Where is it? Consumer goods, sorry. Manufacturing, telecommunications, pre-market movers. I am looking for earnings revisions. Earnings revisions. Apple this morning, 12 a.m. Wow, you cannot read that. There's no way, no how. Fiscal Q3 results should fare better than peers despite macro issues affecting consumer spending per Deutsche Bank. That was this Monday. We believe that the company, this is from Deutsche Bank, the company has managed the supply chain better than it planned a quarter ago. So this is not from the company. While it continued to gain share in otherwise difficult. I mean, really? I don't think I could be long Apple, man. That was a huge run. Apple's seasonal run, right? From July, June to now. Anybody buying new iPhones, iWatches, AirPods? I did not. Did you, Steven? No. All right. I think we're good, you guys. Cool. So that's a wrap for me. Appreciate you guys hopping in. This will be posted. Review it, what have you. It's always solid to take a look at our levels for the week and plan your week ahead. All right. Until next time, I will see ya. Adios.
See ya.